If you got a mortgage and you want to pay it down faster, listen up. All right, if you want to get your mortgage eliminated quicker, what are the ways to do it? You could probably think of one of two ways. First one is increase the frequency by which you pay your mortgage. So if you're paying monthly, if you decided to break that up and make 2 payments per month instead in half, you actually do shave time off your mortgage. This is what the bank tells you. So increasing the frequency with which you make those payments will reduce the length of your time to pay back the mortgage. Second main way is to do like a big balloon payment. What that means is when you have an annual time is up or your renewal is up and you got a lot of money just sitting on the side in savings, you can take that big wad of cash, dump it on your mortgage, and you've reduced what you owe at that time. And most bank mortgages have provisions as to how much you can do that and when. Both of those scenarios have to do with the same thing. Your partner is the bank and you're giving more of your money to them faster. I know you think you're lowering your mortgage in exchange, and yeah, okay, you're not lowering it, but you're giving more of your money to the bank. In either of those scenarios, both your payments haven't changed. Your monthly payment hasn't gone down. You just contributed more towards it. And yes, it will have a downward effect of paying down more mortgage quicker over the life of the mortgage. But is it the most efficient thing to do? I'm going to analyze that from 2 different perspectives. One, on the risk side. What have you done in giving more money to the bank? You've reduced their risk as a lender on your property. You've increased your risk in exchange. If something happens and you're unable to pay your mortgage, well, they got a lot bigger cushion now from which to go after you and have access to the capital in your property. When you have a high ratio mortgage, like a big percent going to the bank, well, they take a lot more risk on that. They own more of the debt. They own more of the equity and debt. They own more of the value of the property in their debt. So you've transferred risk over from them to you when you make these bigger payments. Second way is it the most efficient? Is using your money to pay down debt the most efficient use of that money? This may sound controversial and counterintuitive, but it probably is not the most efficient thing you can do. Unless you've got a really high mortgage rate, it probably isn't the best thing to do. You're missing opportunities to grow. Let's just say you have an opportunity to invest that money into something else, something completely safe, whatever, and it's going to go up in value faster than what you're paying down. If you could fast forward and go to 5 years from now, and you had $50,000 that you were going to pay down your mortgage, instead you invested it. $50,000 now becomes $100,000 in 5 years. At that point, you have $100,000, you can wipe out a big part of your mortgage. As opposed to if you had 50 grand, reduce your mortgage to $50,000, is that going to generate the same $100,000 reduction over 5 years when you figure out your principal and interest payments? Probably not. In fact, we can actually do the math on a chart, on a spreadsheet, and figure out what is the most efficient use of your money if the ultimate goal is to wipe out the mortgage fast. So me and my team, we have a few different ways to implement, but we call it the mortgage elimination plan. Mortgage elimination plan. And it involves just being smart about using your money, how money flows through your life, to apply it towards a specific goal, eliminating your mortgage or eliminating what you owe, whether it means actually removing the mortgage or just making more money than the mortgage is costing you, and then knowing that you can condense your timeline significantly over the course of executing the plan. Totally abstract, totally different, and I understand if it's confusing. And that's why I'm going to invite you, call me, message me, DM me, FaceTime me, WhatsApp me. I'm here. I want to talk to you about how we can set up a plan to eliminate your mortgage quicker. Go from 30 years to 15 years. That's what we do. Now go on, get wealth up.